Will the market crash like in '87? Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I had my afternoon stein of coffee and I thought we'd have a look at this article written by James Hall from news.com.au discussing the potential or comparing the recent fall in the stock market to what happened in '87 and asking the question if it will reach that levels. So the illness graph shows the real crisis in the stock market crash. The Australian share market shedded 232 billion this week alone, but one failing index could reveal the true destruction yet to come. Now, one thing I've been looking at, because I want to do a video on the Great Depression, so I've been reading up on it, and the stock market crash that it had there, it's quite interesting because it wasn't just boom, all crashing all at once. It went down, went up, went down, went up, went down, went up, and then eventually, when confidence went out of the market, it just fell over a year period. And so these things aren't okay. People say they happen fast. Sure, there's days that happen, but it's the extended 1 year period where it just builds upon itself and itself and itself with what the trend is. And when you look back and see that massive change, yeah, that'll be something to consider. So, we've just started on this journey now. What's happening to the market? Confidence has been dented. Sure, there's stimulus, not QE, with regards to additional money put into the repo market. Trump's statement is all pumping it up. The same type of thing was done. Well, not exactly the same type of thing, but same attempts to intervene in the market happened in the past. I'm talking in the 20s. There's examples of bankers all coming together, buying up stocks to restore confidence. And sure, it did. It worked. It worked in 1909. They did that again. But eventually, people sold out and the fear set in again, because you have to realize this is all emotionally driven. As we're seeing the crazy shoppers today, people are just going nuts. People are getting scared. People are getting worried. So, there's no hyperbole too great to describe the predicament stock markets have tumbled into. Illness-induced panic selling shed 232 billion from the Australian shares this week, only narrowly avoiding the worst fall in its history thanks to a late surge on Friday. More than 7% daily falls have been inflicted on the market twice this week, setting fresh post-global financial crisis records. The index's all-time record high of 7,289.7, set on Friday the 20th, has been violently chipped at over the last few weeks, losing 529 billion in value. And the carnage wasn't limited to Australia. An emergency trigger halted trading on the Dow Jones twice this week, after similar 7% plunges, a mechanism designed to prevent panic selling not needed since 1997. On Friday night, Australian time, Wall Street's S&P 500 index had dropped 27% in less than 20 days. During the GFC, the same fall took 286 days. There you go, guys. Does that put it in perspective? But one particular index plummeted in value reveals the true extent of the looming market crash. Gold is commonly viewed by investors as a defensive stock. When a dramatic sell-off takes place and flashing red numbers indicate widespread falls, buyers retreat to companies that mine the precious metal. This week, however, its value was sucked into the vortex along with every other sector, tumbling in value and revealing the alarming trend of investors withdrawing from the stock market altogether. Gold is seen as a safe haven, but when you see a real crisis, you get liquidation, and that means assets all move together. Berman Invest Chief Investment Officer Julia Lee told news.com.au. That's something we saw during the GFC, because when people had to liquidate assets, they liquidated whatever they can get their hands onto. Pepperstone, head of research, Chris Weston, said gold stocks falling in line with the wider market shows everything is disjointed. Up until about 3 or 4 days ago, it was basically seen as a proxy of the bond market, inflation adjusted, or what we call real yield. So if real yield was going down, gold was going up. It was seen as the counter of that, and that's now breaking down. This is an interesting little graph as well. Look at the 87 fall, guys. And look at the crash that we're getting now. And there's the rebound in the afternoon. So what should Aussies invest in? Mr. Weston said investors who have erratically exited the market and bought up positions in other asset classes such as cash or property risk missing out on an eventual but inevitable share price recovery. There's so much disdain and so much panic being expressed in selling at the moment, he said. If we do get a snap back, the market's not going to rally 1%, it's going to rally 10%. That's the problem with being in cash now. If you're going to do it, you're very late to the party, but that's how intense this sell-off has been. Blink, blink, and you miss it, and you're down 20%. Well, there you go. Yeah, he's right there. So, what about property? House prices traditionally boom after stock market crashes. Following the 87 crisis, property values jumped up to 30% from each of the 2 corresponding years. REA Group Director of Economic Research, Cameron Kusher, said values have traditionally fallen during downturns as far back as the recession in '91. It's not until the crash is over that property prices tend to bounce. The National House Price Index has been ticking higher over the last few months, but Mr. Kusher said a slow in search activity on home buying website realestate.com.au suggests it was petering out. Well, are people even going to go out and look for homes right now? This current crisis is a bit different because it isn't necessarily an economic issue, it's a health issue, he told news.com.au. Longer term, you might see more investment coming back into the property market, but for the short term, I don't think the housing market is going to be immune. The main reason for this is people will get worried about the economy slowing and potential job losses. The other thing is because this is such a health issue, I think people are going to be reluctant to go and look at properties. Well, yes, I am really quite interested to see, what the next job ad data will be and what the unemployment rate will be at the next measure. Think about this. The number of people that are going to have to stop working, the number of people that are going to have issues going out, that's going to be the real economic issue here. And then combined with that, you also have the struggles in the health sector as well. This is definitely a unique situation. This is a black swan event. It's different to the past. You're not going to want to be around 40 other groups of people when you don't know where they've been and who they've been in contact with. And, well, we saw what happened in Adelaide, where there were people that were exposed and went going to auctions. So, have a look here, guys. Where's it going to head? Is it going to continue down? Will it shoot back up? Will the government have to print more money? What about the gold? What about the gold drive or crash? Let's jump here and we will have a look. I'll just bring up Trading Economics, guys. We will have a look to see where gold is going right now. Gold and silver. So we jump, everything's up. 9%, 9%, 7%. The ASX 200 is up 4%, 5,500. We'll look at commodities. Everything up except gold and silver. Silver's at $14.79. Gold is at $15.27. So, look at that crash there, guys. So, there you go. That's July 19. Silver's retreated back to January this year. Gold has retreated back to January this year, and that is a hell of a crash. And some people are concerned. Now, we'll jump back. Let's go have a look here at, where was it? 2008. Now, here we had gold go from what was an all-time high, 970, I think, or in the data that I have. Was it ever above 9? Okay, so 970 just before the GFC, and then it plunged right down what is that, 970 to what, $700 pretty much. That's a big decline, and then money started piling into it, guys. Let's jump further back. How much data do we have? In the 80s? There you go. I want to go further back to the Great Depression. I'll have to see if I can find other sources to have a look at that. Let's have a look at silver. We've got 25 years. And there you go. Just before it hit what was also on this 25-year chart an all-time high of $20 an ounce. Oh, wait. Then it dove right down to $10. So it lost half its value, guys. And then it just went insane. It just went insane. Will it repeat? Perhaps. If we start seeing a drastic impact to global economies, a big shock, are people going to dive into these assets again as a safe haven? What about, let's go to CoinMarketCap. We'll have a look at Bitcoin, guys. Is it a safe haven? It's at 5,400. And look at the movement of it in the last few days. It's been we'll look here in the last 7 days. 3 months. We'll look at that. I mean, look at that, guys. Look at that play. It's had a huge fall as well. Will people jump back into it? It's so volatile that I've been looking at it the last few days on the markets. So I'm terrified to even go near it, or at least for contracts for difference. I wouldn't be playing with it with Bitcoin. You know, and I think we'll see that in gold and silver. So, guys, what are your suggestions? Are you worried? So a lot of people are concerned, or are we seeing, the cycle repeat? Will history go through the same steps? We'll have to see. Let me know your thoughts and opinions on the comments below, guys. Thank you all for watching. Please like, share, and subscribe. If you're a fan of the channel, there's several ways you can support us. You can join the channel on YouTube or Patreon for a small monthly fee. You can also use our affiliate links at Amazon or eBay for your consumer purchases, or Independent Reserve and Kucoin for the crypto traders out there. We have merch from the HeiseSays website, pocket squares, handmade, right behind me. We also have Teespring coffee cups, although I'm waiting on a sample. Once I get it, you can all see. And then finally, we have PayPal if you want to contribute that way. Thank you all very much. Have a great day, and I'll see you next time. Bye for now.